my goal here is not to provide advice. This is not advice, this is education. And I'm not saying that from a disclaimer standpoint. I'm not worried about that. I'm saying that because I don't post frequently enough on YouTube for me to even indicate what I might be doing on a short-term basis. Trading is, it's an active, fast-paced process. And if I say I'm doing something and then not be able to come back and inform you on changes to that outlook, then I'm not doing any justice to you or anybody else. So I'm going to refrain from providing any direct type of feedback or analysis on trading. Trading is one of those things where it's supposed to be a non-emotional type endeavor, and I've been known to have an opinion and a trade in a certain direction, and the market reverse on me, and then I'm capable of changing my analysis and my opinion very rapidly, and not really caring about that, and being able to, in many cases, take a trade in the opposite direction in the same given day. And for me, that is what sets apart good traders from average traders. Average traders are so fixated on being right and having sort of the right analysis pan out, as opposed to a very successful trader who wants to have a strong opinion but is very willing to be wrong and accept being wrong, because they only care about price in their trade and taking the next correct trade. Whereas the amateurs are more like, oh no, I really believe it's going to go up, or I really believe it's going to go down, and it's going to do that for fundamental reasons or for some other bias that they may have, and price goes against them, and they just they become stubborn in their position. So I don't want to have a situation where I'm telling you one thing and then the next day market has changed and I've already changed. I've already maybe flipped my position, but I can't then update YouTube or anybody else on this channel in a timely manner or in the correct manner. So I don't want to do that injustice to you. And second of all, I do belong obviously to another service, which is a paid service. I'm not here to tell you to go buy that at all, but I'm just saying I have to also respect that process and those members as well. So I'm going to talk about short-term analysis today, but I'm also going to focus mostly on the longer-term scenarios and more gear it towards investors who are not susceptible, should not be susceptible to short-term swings in price. Now, where I feel there is an opportunity and a clear opportunity in the short-term trade standpoint, I won't use a video to cover that, but I'll use the community tab on YouTube to maybe give you some ideas here and there. And it may not just be Bitcoin, it could be anything. It could be gold, could be stocks, could be crude, or could be some of the altcoins as well. And if I do that, I'll post something in the community section with a chart, and I'll basically spell out where I will be wrong and where my stop would be. So in that case, even if I get stopped out, or even if the analysis changes, you wouldn't be left sort of saying, oh, scratching your head, well, what is he doing, or what could have he done? It'd be a simple one-way trade idea or theme that I'll provide. So that will only come in the community section of this channel. Make sure you subscribe so you can get alerts whenever I do post. And I'll try and do one maybe a week on that, so kind of give you a higher level idea that is mostly on a daily or weekly chart that you can take advantage of, perhaps, or at least get an idea for you to formulate an idea for how you trade and fit that into your own style. I also went through some of the questions that you provided to me. I will cover some of those today. Most of those will be around the current cycle and then also the 4-year cycle. I will focus mostly on that for today. And a lot of the questions were, where are we in this current 60-day cycle? And that's an interesting question, because right now we sit on day 23 of a 60-day cycle. We have a short 53-day cycle back on February the 6th. As I indicated in a previous video, that was a bullish development because we spent 44 days declining from the December high to the cycle low without failing, meaning without dropping below the prior cycle low in December. So the fact that it spent 44 days declining without exceeding the low of of December was a bullish thing, and I did expect a little more, say, oomph out of this new 60-day cycle, and so far that really has not materialized. In fact, it's actually turning out to be a little more bearish than I'd hoped for. And I tell you why. Is because we spent 18 days so far retracing up to this point here on 24th of February. That took 18 days, but if you look at the prior cycle, it started from a lower point and reached the same point that the day 18 high did, and it did that over only 9 days. So in 9 days it covered, X amount of territory. In 18 days, double the amount of time, it only managed to get to the same point and form essentially a double top for the most part. Now when we had that real, slam down the market this past weekend, it took me out of my long position. I had already cashed out a third. I think I posted kind of a community alert that I had taken a third of the profit and let the rest ride. The rest was riding at a break even or slightly profitable standpoint. But when this slam came, I was out right down the bottom here, pretty much near the entry for the 2/3 of the remaining open position. And now we're kind of trending sideways. Now, I like consolidations in an uptrend. They typically resolve with the direction of the trend. Same applies for a downtrend. So here's an example right here. Here's a downtrend, here's a consolidation, continuation, right? And that happens all the way down in trends. So on the way up, we had this consolidation early in the cycle, and then we continued higher. Consolidation, higher. So what I'm concerned about now is that we actually are back in a downtrend. If you notice, the 10-day moving average has turned. It's turned over. I do like to use the 10-day moving average to dictate short-term trends, and right now price has stayed 5 days below the 10-day moving average, and for me that's a bearish development. I don't like to see, I don't mind seeing price drop, as we saw right here, below the 10-day moving average for a brief amount of time. But when we consistently see 5 or 6 days, as we are now, below that 10-day marker, for me that's a warning sign that some trouble lies ahead. So barring a kind of immediate rally from this point, and it's still possible that we get kind of another little move higher here. But really what I think is happening, and again, I don't like to focus too much on price. I'm a time-based analyst, and I'm using my time expectations to provide and formulate a view on where I think price might be heading. But again, I never get married to price. I quickly and easily move back and forth between views as price dictates. But what I think here is that this 18-day high, I'm not sure yet if this is the high for the next 60-day cycle, right? We have another 60-day cycle due in early April. I don't know if this 18-day high will be the high point for that entire 60-day period, but I have a strong feeling now, probably more than 50%, that it will be. But what I think first is happening is we're moving down into what's called the half cycle low. So if a 60-day cycle is typically around 60 days, around the midpoint you get a dip generally. So I think for the first half of this cycle, we've seen the top. Day 18 is the top. So what I think we're going to see is now a move back below this little cluster here, but to remain above this cluster that appeared early in the cycle. So something down to maybe the $3,600 area, okay? And then it becomes really important to see what Bitcoin wants to do once it forms that half cycle low. If it should rally out of that half cycle low, it should exceed whatever area we reach in the coming day or two or three even. And I think it ends up in this sort of $4,000 to $4,100 area as a potential top for the second half of this 60-day cycle. So kind of, making its way back up here, get everybody excited again, but fail to exceed this area. Then it begins what I hope will be just a slow grinding retracement all the way back to this area here. And come to think of it, I think I've drawn this a little too wide because that goes into May. So let's get up to sort of end of March or 20th of March, up to that point there, sharply come down, and then sort of come into this point here. And then by around sort of mid-April, come back down, either retest the cycle low in February, possibly even retest the December low all the way down in 3100, okay? And then in sort of a really outlier type possibility, do an even deeper flush on really sort of high volume, fast type market, all the way down to make a new price low, but then shoot up really rapidly from that point. Now, personally, I don't think we're going to break this December low. I think this December low may hold as the 4-year cycle low, and I'll get into that in a little more detail coming up. I think the real takeaway here is that, and I described this in the 4-year cycle video that I did, even though we may have and should have a bear market low from a price perspective, we still have to go through that accumulation phase in the new 4-year cycle where it just chops mostly sideways and really just, whipsaws traders in and out of position because it's just not ready to begin that next sort of bull phase. We need to absorb many more sellers in this area. We need to start to build a really nice deep base in Bitcoin, and that typically will occur over 2, 3, and even 4 of these 60-day cycles, maybe over 6 months to even 9 months, even up to a year perhaps, of mostly grinding sideways, but over time begin to start forming these higher highs and higher lows in the cycles. But we are still very sort of close or very near the current low for the bear market, and I don't think we're ready yet to start putting in significant higher highs. I think we still need to resolve this coming cycle. And I talked about this pretty clearly in the 4-year cycle, that April was also potentially the 4-year cycle low for the bear market. Now, that puts us slightly above or beyond the 4-year cycle in terms of count, but that's fine. That happens and can happen all the time in cycles where you get sort of this 10% range on either end. Sometimes it's a shorter cycle, sometimes it's a longer cycle. So going out to April, in my opinion, would not be an issue. And again, I've drawn this a little probably too far out. We probably want to move this even more here. So the takeaway is, I'm not sure if we get a price low that's further down below the December low, but if we do, I think it's going to come on a very fast sell-off and a rapid reversal. So that would be the new low scenario. The other possibility, which I think is the higher possibility, is that we get more of a double bottom and a retest, and that would be more of a slower type development, and more of a grinding development over time, and that really wears at the bulls, at their patience. People who held on all the way and managed to stick it out, or people who got really excited right here recently or in the previous cycle, who got it back in, and for them to see price drop all the way back down again and test sort of the $3,300, $3,200 areas, that is it's punishing, right? It's not something they expect and want to see, and that becomes kind of your final capitulation. So you don't really need necessarily brand new fresh lows to to have that effect, but I still think we need to get down to this one more cycle low, and again, that could come at a double bottom on the recent cycle or the prior cycle one before that. But again, I think we're coming back to retest this area in April some point. Now, of course, I'd be more than happy to be wrong on this. I'd be more than happy to see the December low stick as the price low. More than happy to see this cycle low be a higher low, which it is obviously confirmed, but then to see a development like this where we kind of go up half cycle low and then we pop up rapidly and then form that cycle low higher, right? So somewhere towards the end of March, perhaps early April, something like this, but coming at a higher price point and then moving up as well. This is a possibility. This for me would be confirmation of the bear market low. We would have a series of higher highs. Let's draw that in. And we would have a series of higher lows, and that for me would be the start of obviously the new 4-year cycle. It would confirm the bear market low in December, and then would have a new trend higher, and then the next cycle from here can begin to start to recover and start to bang up against, if you go back here, bang up against all these cycle lows that occurred in 2018 at the $6,000 area. Now, that $6,000 area is going to provide a significant amount of resistance for a very long time, in my opinion. But we still need to worry about what's coming before that, when it's the base building accumulation phase. There's a lot of area, a lot of room still to fill in between this low of 3,100 area all the way back up to the $6,000 area. And it's going to take, over many cycles, a process of backfilling and accumulation to get to the point where we can begin to attack the $6,000 range and test it multiple times before breaking higher. So somebody asked me, what's the probability that Bitcoin has bottomed? Well, let me ask you a question then. Does it really matter at this point? I think we are now sort of splitting hairs on whether or not we have a bottom in place. The 4-year cycle has essentially run its course. Now, it may not be 100% behind us at this point, but if we do see further declines and a new price low, I can pretty much tell you that I believe, at least in my opinion, of course, and it's always my opinion, that it would be very short-lived. It'll be something similar to what we saw back in, let's go back to 2015 here. So we had the 4-year cycle low, we had this chopping process. And then we had these candles here in August, okay, which was around, 8 months later, so 3 cycles later. Significant capitulation and drops. I don't know, on some charts I think there was a new price low, but clearly this is beyond and into the new 4-year cycle. But there was a scare right here, okay, and this was kind of that final sell-off before we V-shaped and went higher. And this is why I'm saying right now, not that I'm a fan of algos and comparing price action from one cycle to the next. I like to focus on time. I think people fall into traps when they try and overlay charts from a different period with one and become very biased in how something should play out. I'm just basically saying that if we do get a drop from this point, something similar to what we saw in 2015 there, that it's going to be short-lived. It's a shakeout, right? It's a shakeout on epic proportions, and we're not going to spend a lot of time down into that new low area. It's going to be short-lived, and it's going to really shake out the final bulls that just can't hold on any longer before reversing higher. That would be the worst place to capitulate and sell. But it's also not the type of outlook where you should be sitting on the sidelines waiting to get in. Now, and I've said this many times, there's a difference between trading and there's a difference between investing. If you're trading, the daily chart matters a lot. What you see in the chart on the daily matters. How you trade week to week matters on the action of that week or that 60-day cycle. But if you're focused on where the bear market ended or if BTC is bottomed, you're focusing on the wrong thing at the moment. Right now, you should be fully allocated, fully committed to whatever level you're comfortable with. Not trying to be, pick up pennies at this point. Who cares if it goes down briefly for another $1,000? If your upside target is a minimum of 20,000 back to the prior highs, or in my case, where my target is more like up into the, $80,000 to $90,000 area based on the prior cycles and how they performed. Who cares about $1,000? Why would you miss the potential, or the possibility, more likely to say, of BTC not really looking back from this point? And that's a possibility. Okay, we can break higher, we can test the $6,000 area. Okay, and it doesn't mean we're going to go into a massive bull mode, but we may get a situation where we just start to grind and grind and grind. Okay, and if you're waiting for that $1,000 final drop, right, just to get a little more BTC, then you're risking a potential $80,000, $60,000, $70,000 move to save $1,000. It doesn't make any sense whatsoever. Don't be afraid to get in at these levels, okay? Most people were afraid they were going to miss out in the $6,000 and $8,000 area. Don't be afraid at this point. Bitcoin is down 85% from the highs, and that occurred 14, 15 months ago now. This is a very, very advanced bear market, or most likely ended bear market, and already into a new 4-year cycle. So, I can't be any clearer than that on this. People, I get this question so often, and it's a reason why I'm really focusing on it here. If you're in this for the long term, if you believe in crypto, if you believe in Bitcoin, if you believe that this is going to be a disruptor to the financial system, then what the hell are you waiting for? Don't make the mistake of trying to save some money. Get your position. You'll be rewarded if you're right. Now, there's a chance that this technology has already bubbled and topped. I don't believe it, but there's always a chance, right? If you say 100% that something's going to happen 100%, then you're setting yourself up for major failure in life and in trading and investing. But as I believe that this is going to go much higher, there's no point, there's no argument right here that this is an amazing time to be getting in. This is essentially a gift if you believe in the long-term narrative. Somebody in the comment section also asked me, it looks like this is early accumulation phase. Is it normal or possible for price to create a lower low in this phase and still consider accumulation phase? Yes, it is. You can get a massive amount of volume pushed down Bitcoin at this point. It could be a sort of a manipulated trade. But again, that's why I said if we do get a lower low, it's going to come on a very short time frame. It could just happen over a 1-day or 2-day event where you get a massive selling pressure, massive sell-off in leverage longs, and then that gets pushed to a level where a significant amount of demand and supply comes into the market, or demand I should say, and pushes price back sharply once that either manipulation or that selling volume is dried up. It's almost like a slingshot, right? It's just going to bounce right off the bottom and rapidly move higher. So that's that scenario. Don't go looking for it or chasing it. If it happens, great. You may want to have some stink bids in there. So meaning you may want to have some limit buy orders in at maybe the $2,400 or $2,500 area in case it does reverse back down sharply, and maybe you can pick up some more Bitcoin. But you know what? Don't be concerned about making millions and millions and millions of dollars. I hear that as well quite a bit. People kind of extrapolate. Okay, so if it's going to go to 80,000, and it's 3,000 now, and I can buy X amount, I'm going to be, a multi-millionaire and so forth. Don't think like that. Think about getting into a position that's comfortable for you, that's not putting your family at risk, your livelihood at risk. Buy enough where, yes, you got some skin in the game, but when you're talking about a potential 100x move, or even to 80,000, we're talking about a 30 or 40x move. You don't need to put a lot of your risk into the market here to take advantage of this. And people are like, well, but if it's going to 70,000, why not retire in 3 years, right? Why not get to the point where I can make millions and millions? I can tell you why that's not going to work. It's not going to work because you're not going to be able to hold for that long. Very few people know and are capable of holding and then selling near a top and cashing out and retiring on that private island that they're talking about. It just doesn't really work that way. What you're better off doing right now is mentally preparing yourself for what's coming over the next 4-year cycle. Getting yourself a comfortable position that you can ride higher over the next 3 or 4 years without worrying about whether that huge position, that profitable position over time is something that's sustainable. Okay. Another strategy along that line is that you can set some profit targets for yourself. So you can put in sort of 100% of what you're going to allocate. Obviously, 100% allocated now, for example. You can have some price targets, and this actually, to be honest with you, is what I'm doing. You could have a price target around the $15,000 area, and you can say to yourself, well, what's one possibility? One possibility is that 20,000 is the peak for Bitcoin. Full stop. Never going to go beyond. And that's kind of obviously a very bearish look, but it does cover some of the downside action. And I think what could happen is we could rally, get to the point over the next few years, okay, towards the top of the 4-year cycle, where we don't get that massive new wave, a new cycle, up to another 10x or 20x. And that we only get maybe, 3/4 of the way back up to 16, 17, 18,000, or maybe even a double top. Okay, so you want to be in a position where you want to take something off the table at some point. Okay, and that would easily cover your initial investment right now and leave you with a nice little profit, something you can reinvest into some other type of investment, whether it's a property or stocks or something else. But walking out feeling as if, even though even if it does top in the next 4-year cycle without getting to 20,000, that you've accomplished something, you've covered your risk from early on, and you're walking away with it. And the reason for doing that is that once it gets above 20,000, if you've covered your initial investment, if you've taken some off the table and made a profit, then you have really strong hand status, as I like to say. And that's going to allow you, with obviously the right mindset and the right training of your mind, to be able to hold and really hold on. If and I'm not using the right time scale necessarily right here, because 2020 is going to be way too early for this. But let's just try and just very roughly draw something out, right? Let's just say we test 20,000 and we start to break higher at that point. So it's gonna be getting difficult, and it's gonna get in the media. It's gonna be talked about again a lot, and people are gonna start FOMOing in left, right, and center. And if you have a position that's already essentially paid for, you're going to be able to ride this higher, and you're going to be ahead of everybody else, because people are going to be starting to add to their positions in this area here. They're going to start buying in this area. They're going to be fresh new buyers in this area, in the $20,000 area, like there was fresh new buyers in the $3,000, the $5,000, the $8,000, $12,000 area in 2017, even though they may have been looking at it for years. But there's nothing like higher prices, new all-time highs, the people talking about it in the hair salon and everywhere else for creating demand. That's how speculative demand is created. You want to be, by the time it gets to that point, well and truly in the profit, well and truly cashed out and riding with the house's money, so to speak. And then you want to have another price target, probably somewhere around maybe the $40,000 to $50,000 area, where you're banking some serious coin, okay? And that's going to also allow you, again, the same type of thing. You're going to profit from here. You're not going to get too greedy. And this type of profit up in the $30,000 to $40,000 area would be the one that really makes you sets you up for a while, makes you pretty comfortable. But it's also then, lastly, going to allow you the opportunity to potentially realize the really big profits that could come at the end of the 4-year cycle. And again, could, if I'm using those words purposely, because I don't want people to just think about this as if it's the easiest get-rich scheme that there is. It's not. And the reason why, again, it's not is because did you all cash out at 18, 19, 20,000? I bet you 99% of you did not. So having a game plan coming into this, and obviously there's a lot of time left before then, but having a game plan for how you're going to hold, not just I'm a hodler. As people say that, well, if you're a hodler, then you're going to hodl all the way to 100,000, and then you're going to hodl all the way back to 25,000 or 28,000 when the next bear market comes along, because you don't have a plan necessarily on how you're going to essentially capture the gains of the next 4-year cycle. And that's just one strategy I think is going to help you, is have a couple of these intermediate time frame and price targets there that are going to allow you to capture the gains and then eventually ride to the top. Well, not exactly the actual top tick price, but at least get to a point where you're capturing 80 to 90% of the gains in the next cycle. And then that's how you really take advantage of what the 4-year cycle potential can provide you. So my friends, in closing, I just want to say, keep your eyes on the prize. Always think of why you got into this, what your goals and objectives are. When you look at the long-term picture, the long-term possibility, are you focusing on the wrong or the right things? The wrong things are looking at this current action, trying to find the absolute bottom, trying to pick the bottom perfectly, trying to understand what certain technical indicators are telling you, whether they're Elliott waves or whether they're clouds or whether they're RSIs, or it doesn't really matter in the end. In the end, it's all about the price. It's all about the time. And we are now in that sort of golden opportunity area. And just going to require, patience and perseverance, and a lot more patience again. Patience. I can't emphasize enough how important patience are. And people become impatient when they start thinking dollar signs or euro signs or any other currency that you like. When they start only focusing on the profit potential, you lose sight of the plan and the process. Once you lose sight of the plan and the process, you cannot take advantage of the eventual price gains that are going to come. So keep that in mind. I'm gonna throughout all the videos going forward continuously emphasize that I want to make this a journey, a 4-year cycle journey with you, and I want you to come along with the ride, and I want to come out the other end of it having executed on a process and a plan, and let the gains hopefully come with it. Thank you very much. If you like this video, of course, give it a like, give me a follow, share it on YouTube, share it on Twitter and Facebook, anywhere else. That would help. I would appreciate that. Don't ask anything else of you. I do. Thank you for watching, and I wish you all the very best.